The last one we'll talk about here is the statement of functional expenses. This is a very, very popular report in the nonprofit world. This is where you really get into detailed expense analysis. You break out the expenses, 3 categories: programs, admin, and fundraising. You want to track every program and special event separately. Again, back to the very first thing we talked about, having those unique layers for every single transaction, or unique attributes. It really allows you to get to this type of reporting. For better or for worse, one of the key ratios that people look at in the nonprofit sector is nonprofit sufficiency. How much is going towards programs? And actually, just this morning, I got something from Nonprofit Quarterly, and it said, how come I can't get any funding for overhead? And there is a growing movement in the nonprofit sector that's saying overhead is not necessarily evil. Overhead is not bad. Historically, over the last 20 years, nonprofits have really been held, how much is going to program expenses. Part of that is because of fraud. When you get organizations that crop up and say, hey, we're helping military veterans, and 20% of the money you donate actually goes towards the programs, and 80% goes towards admin and fundraising. There's a chance that a fraudulent nonprofit, and that is an alert. But in general, the general rule is if you're at 75% programs or higher, you're considered a healthy, responsible nonprofit. Some of the largest ones, World Vision, these big, huge billion-dollar nonprofits, they get their programs up to 90, 91, 92%. For a typical nonprofit, though, that's very difficult to achieve.
I think to your point, it sounds like a lot of that, again, goes back to context, right? So if you're a startup or you're a young nonprofit, right, you're naturally going to have a higher percent overhead because you may have an executive director, a program manager, depending on where they allocate their time.
Right.
Right. You may naturally have a higher percent versus one that's been around for 5, 10 years, where you're able to kind of absorb more of that G&A across all the program staff and expenses. Right?
Yeah. So it's definitely related to scale. The larger you are, the easier it is to have this number be high. You can see here, this is data from the IRS that generally shows that the green bar on the left, human services is around 80% programs, arts and culture, 72%, education, 80%, health is 79%, environment and animals, 78%. So again, if you're anywhere in that 75% plus, you're in line with his expectations. The chart on the right is interesting as well, and it's how much do you have to spend in raising to raise $1? So in general, people spend 15 to 20 cents to raise $1, which means their fundraising expense is around 15 to 20%. One of the key things, and Ron just sort of alluded to it, the way you allocate your expenses, right? So how you determine what is program, what is fundraising, what is admin, is a gray area. It is fuzzy. It is not black and white. Basically, the rule that the IRS and GAAP put forward is that the methodology must be documented, reasonable, and consistent. And that's basically it. And so the most popular method, and again, 75% of your expenses are going to be people, is you allocate it based on where they spend their time. So you have a program director, 100% of that goes to programs. You have a development director who's fundraising, 100% of that goes into fundraising. The trick comes in where you have staff, you have executive director, and executive director. An executive director is not 100% admin. An executive director probably spends 25% of her time on fundraising, probably another 25% on admin, and probably 50% on programs. So you can allocate that expense in whatever is a reasonable and documented way. If you do need that methodology to be approved, executive director. You know, we here at Jitasa can help you come up with what's reasonable and consistent. Some of the other ways that people allocate expenses, you can do it by, you know, so like salaries, your rent. So if you have a facility and 1/3 of it is office space and 2/3 of it is a rehearsal for your dancers, well, that means 2/3 of your rent is actually a program expense, and only 1/3 of your rent is actually administrative expense. Office expenses, same thing. So if you have a copier and the vast majority of it is you're printing out flyers for fundraising, well, that's a fundraising expense. But if half the time you're printing out, you know, educational brochures that you're passing out in the community about how to, you know, have their disease prevention, well, then that's a program expense. So you really have a lot of flexibility in how you this methodology, and this is something that we frequently see nonprofits don't do this accurately or don't do this as well as they could. They tend to assume more are admin than really are admin, and that's where having a good methodology really helps. So go through this case study here. Again, Jitasa Justice is looking at it. So right now, you know, if you look down here at the end of the dashboard, they're at 70% programs, 14% admin, and 16% fundraising. So a little bit below where they want to be. So what I would do with this organization is I would look at the big numbers, right, and then start looking at the methodology and saying, you know, are there ways, is the methodology accurate? And if it is, then the second question is, you go, okay, is there some money that we can allocate, you know, more into programs, or is this just a matter of to get bigger? So again, if you look at this and you kind of look at the key metrics, you say, hey, let's really look at the overhead. Let's, you know, there's this $29,000 in admin. You know, let's really dig into that transaction by transaction and see, you know, can we correct this in the second half of the year? Or were there extenuating one-time circumstances? You know, we had to buy, you know, something for the office, or was there a reason that is? So the assessment is, hey, we're below the best practice. Let's reallocate our funding, or perhaps just accept that, hey, we're going to be at 70% programs until we're $1 million organization and until we grow out of this. So those are, you know, the 4 main reports that I would look at and how I would dig into them. There's other ones that you can look at. You can look at these things by program, by event. If you're a larger organization, you might want to look at a budget versus forecast, which means you're looking at, you're rerunning the budget basically every 3 months or 6 months. Donor analysis, let's look at where does our revenue come from. Is it coming from 5 or 6 key donors, or is it coming from 100 donors? So there's a lot of other reports you can look at if you have your fundamental structure set up properly.